third chapter of subject economics is money and credit. Barter system. In the older days, human needs were simple and there was a direct exchange of goods. The direct exchange of goods is termed as barter system. Thus, barter system means the direct exchange of one commodity for another. Difficulty of barter system. With the progress of civilization, the number of goods and services to be exchanged had increased. This created difficulty or inconvenience in the way of direct system of exchange. There are certain difficulties such as lack of double coincidence of wants, difficulty of storing value, deferred payments are difficult, some goods are indivisible. Money, anything which is used as a medium of exchange, store of value, and standard of deferred payments. There are three main functions of money. First, medium of exchange. Second, common measure of value. Third, store of value. Forms of money. In the very early ages, various objects were used as money. For instance, in India we use grains, cattle, leathers, metals, etc. as money. Thereafter we started the use of metallic coins, gold, silver, copper coins, and it continued till the last century. In the modern times, we normally use two forms of money, currency and bank money. Currency. Currency includes coins and paper notes. Bank money or deposit with banks. Bank money refers to bank deposit by people with banks which they can withdraw at any time they like. The bank deposits in the bank accounts that can be withdrawn on demand are called demand deposits. These demand deposits can be transferred to another person through a bank check. Loan advancing activities of banks. Bank performs two important functions, that is acceptance of bank deposits and advancing of loans. Thus on one hand bank accepts deposit from the public and on the other hand they give loans to them. Normally some portion of total deposits is demanded by some depositors at any time. Hence bank keep only a small portion of their total deposits as cash reserves with themselves. Credit loan refers to an arrangement in which the lender supplies the borrower with money, goods, or services, and the borrower promises the future payment. Terms of credit. When a borrower takes credit or loan from a creditor, he has to pay a specified rate of interest along with the repayment of principal amount. Loan may be granted on security or without security. Normally, lender demand collateral security against loans in order to safeguard their money. Collateral means an asset that the borrower owns, such as land, building, vehicle, etc., and uses as a guarantee to a lender. Financial institutions for credit or various credit arrangements. There are two main categories of credit arrangements or financial institutions for credit in India: formal arrangements institutions and informal arrangements and institutions. Formal arrangements institutions for credit. The formal institutions for credit mainly comprises cooperatives, regional rural banks and commercial banks. Loans given by the formal financial institutions are termed as formal sector loans. Informal arrangements for credit. To meet the credit requirements, especially for rural people such as farmers and artisans in India, informal arrangements or institutions had always occupied an important place. They include money lenders, landlords, traders, and commission agents, relatives and friends, etc. Loans given by these informal lenders are termed as informal sector loans. Self-help group. We have seen that the poor households are still largely dependent on informal source of credit to meet their needs. In order to overcome the difficulties, poor people, particularly women, have devised a new way to get money at reasonable terms. They form a group of 10 to 15 members called self-help group. All these members know each other very well and generally belong to one neighborhood. They make a saving of rupees 50 to 150 or more per person as per convenience and pool this amount. Members can take loan from this pool at affordable rate of interest.